Another major event happening this week is the launch of iPhone 16. It will be launched today in Cupertino, California. Welcome to a brand new episode of Market Tape. This is the show to help you stay up to date with the Nigerian and global capital market. It's a show you never want to miss, so make sure you're subscribed and turn on your notification button so you never get to miss any of my shows. My name is Nathan Casey Nwokoro, and it's a brand new week. Nigeria has faced a multitude of economic challenges. Name it, from inflation to insecurity, currency devaluation, widespread poverty, and most recently, energy crisis. Despite the fact that Nigeria is one of the leading oil producers in the world, Nigerians have had to deal with countless incidences of energy crisis. Now, as we went through these problems as a country, one thing Nigerians looked forward to was the emergence of the Dangote Refinery. For years, Nigeria has been unable to refine its own crude, depending on imports from foreign refiners. But recently, with a $20 billion investment by Africa's richest man, Alhaji Aliko Dangote, we've had a high sense of optimism that the issues around Nigeria's oil industry, at least one of the issues, will be solved. On one hand, a lot of people expected that with the coming of the Dangote Refinery, we're going to start to see increased supply in the market and end to incessant queues in our filling stations. On the other hand, there are people who took that expectation to a higher level, expecting that the price of petrol will come down drastically. Now, is this a reasonable expectation to have? Okay, to understand what is going on in the Nigerian oil industry, I think it's important that we look at where we are coming from as a country. So for years, successive governments had attempted to insert themselves in the delivery of critical goods and services in Nigeria, from the oil and gas sector to education to healthcare to telecommunication before the Obasanjo years and even electricity. But sadly, the participation of government in these critical businesses did not come with very pleasant experiences. If I remember secondary school economics very well, Nigeria is, by the textbook, a mixed economy, something straddled between a socialist and a capitalist economy. To differentiate, a socialist economy is one where the government owns the production and distribution of goods and services, whereas the capitalist economy is one where the government, the private businesses, individuals, and entrepreneurs own the production and distribution of goods and services. Now, in my opinion, Nigeria is leaning towards more of a socialist economy than a capitalist economy. So I'll say we're practicing a socialist economy with a little sprinkle of capitalism in between. Before 1999, where we saw the privatization of key government assets, Nigeria was leaning a lot towards a socialist economic system. But between 1999 and 2007, we saw a lot of withdrawal of government from many of these businesses, especially the telecommunication sector. And if you cast your mind back, that is what has led to the transformation of our telecommunication industry that we are seeing up to today. So the argument for a socialist economy is that it helps regulate price of goods and services and minimize the exploitation of the masses by businessmen and entrepreneurs. And for many Nigerians, this is music to our ears we don't want businessmen to exploit us. So it gave the government the sort of backing they needed to continue to promote this policy of government participating in businesses. And again, most Nigerian businessmen have very bad reputation with the public. Most Nigerians see businessmen as exploitative. One example is the Dangote, who is running the biggest refinery in Nigeria today. But for years, many Nigerians saw him as a monopolist, as someone who was bad for the masses, as someone who is exploitative. Again, whether this opinion is, or this view is right or wrong, is something that is up for debate. However, for me, the biggest problem with a socialist economy is inefficiency. Socialist economy leads to inefficient allocation of capital. And I'm going to give some example. A socialist economy makes this argument that you are trying to regulate price, demand and supply, and by extension regulate price and avoid exploitation, reduce inequality basically, ensuring that everybody has a level playing field. Now, but the kind of socialist economy that we practice is driven by subsidizing goods and services, because this is what happens. If the government decides to regulate demand and supply, at some point you may get into a situation, which is what we often see in Nigeria, where demand is more than supply. What happens? In a free market economy, if there's more demand than supply, price levels will go up. So if there is more demand than supply and government is the one controlling the production and distribution of goods and services, government will not allow the price go up in a bid to protect the masses. And what it will do in that instance is to subsidize prices for the people. For the average Nigerian, it's music to our ears. We want everything subsidized, and this is what we've enjoyed over the years. Education was subsidized. Electricity was subsidized, healthcare was subsidized. What else? Petrol was subsidized. So practically we're living on subsidy for many of the goods and services that we consumed as a people. But now, was this the most efficient use of these resources? I will make an analogy here. If you are a wealthy person, you have a lot of money, and you tell your wife, you don't have to work again, I'm going to subsidize your lifestyle. Just anything you need, say it and I'll provide. It sounds cool, right? Especially if you have a lot of money. But what if the source of that income starts to dry up and your wife has already acquired a very exotic taste? You start to pay for her vacations, you start to pay for her jewelries and all of those. At some point, it may start to compromise other important things that you have to do as a family. Maybe your children's education. You may suddenly not have enough money to live up to those responsibilities. And this is what happened. Over the years, government started to focus less on subsidizing education, subsidizing healthcare, and focused a lot more, because this is where the masses were easily triggered, started to focus more on subsidizing fuel and electricity and even exchange rates. So most of this, the prices of these commodities and services, we didn't know until recently, when the Tinubu's administration came into power in 2023, last year, and then removed or said they removed these subsidies. So to me, politicians are not people you trust with allocation of resources, because the world over, politicians are not known as people who are efficient at allocation of resources. And to me, that is the crux of the problem, of the issue that we have as a country. So the expectations that petroleum prices will come down, I think we've been spoiled for years. And that is why we had this expectation that we'll continue to enjoy ridiculously low prices. So that expectation, to me, is missing the point. The bigger point is that, unfortunately for us as a people, we got to a point where we kind of boxed ourselves into a hole where suddenly, while the government was busy subsidizing all of this, they focused less on critical areas of needs like education, healthcare, security, most importantly, infrastructure. There was a lot of neglect, and there was really no evidence that subsidizing all of this improved the standard of living for anybody. And that, to me, is a critical issue. There is no evidence that subsidizing petrol, subsidizing electricity, subsidizing education for the period that they were really truly subsidized, and even subsidizing healthcare, there was no evidence that all the billions of Naira that was spent running these subsidy regimes improved the standard of living for anybody. If you look at the numbers, apart from the period between the year 2000 to 2007, 8, 9, 10, that we saw steady improvement in both the gross domestic product and the GDP per capita, except for that period that we saw a steady improvement, we didn't really see much impact in terms of sustainable growth. So, and then suddenly, at the point where standard of living is low, at the point where most Nigerians are living below poverty line, it's estimated that over close to 100 million Nigerians are living in extreme poverty. These subsidies were suddenly taken away. That is why it feels like so excruciating for many people today, and the whole economic crisis that we're facing as a people. So on one hand, many people argued that removing these subsidies was the right thing to do. And don't get me wrong, subsidy to some extent is good. But the crux of the matter is that politicians are very, very bad at allocating resources, especially when you have scarce resources, as the case of Nigeria. I give an instance. Between 2020 and 2021, the US government paid about $2,000 to US adults to cushion the effect of coronavirus. And truly, many people saw it at that time as the right move to make. But do you know what is wrong with that? Now, a lot of those monies were paid to people who were not affected by coronavirus. A lot of those monies were paid to billionaires, people who had high-paying jobs. A lot of those monies got to young people who were still dependent on their parents, who really didn't need that money. And where did most of these monies end up? It ended up in the crypto markets. If you remember, between 2020 and 2021, we saw a surge in both the stock market and the cryptocurrency market. Most of those demand for this asset came from the palliatives rolled out by the US government. That was where most of those monies came from. Was that the best use of that? I think it was estimated to be about $930 billion. Was that the best use of that amount? No, it wasn't. And a lot of people will point to the fact that the high level of inflation we are seeing today got part of its origin from that money that hit the US economy. So I'm saying that for government to participate in critical aspects of an economy at the expense of the private sector is not the best for a country like Nigeria. So I'm all for more participation of private individuals in business. What we are seeing today is a lot of back and forth between Dangote and the NNPC. Dangote, obviously today, is the largest refiner of oil in Nigeria and even in Africa. And his refinery is said to be the largest single train refinery in the world. So suddenly he's a very important player in the Nigeria oil and gas business, especially in the supply side of refined petrol. On the other hand, NNPC is both a regulator and a commercial player in the oil and gas sector. Before now, NNPC used to be the sole importer of petrol, refined petrol in Nigeria. And suddenly they have competition. And that is how I see it. Suddenly they have competition. And NNPC, to me, has a need to remain in this industry. This is a dilemma that Nigerians have to look at. The government has to stand up and deal with. NNPC cannot be both a regulator and a commercial player at the same time. It's like being a referee and a player in a match at the same time. It's not going to end well. So at some point, the NNPC, I understand that they need to regulate price to an extent and maybe manage the expectations of Nigerians. I'll put it that way. I feel like they're trying to manage expectations by not hitting us with the actual price, pump price of refined petrol all at once. I feel like they want to stage it. But at some point, the NNPC has to leave the scene and leave this industry to market forces while finding other ways to moderate the impact on the most vulnerable Nigerians. But the era where we try to subsidize our way through all our problems has not worked for us as a country. And I think we need to reassess our dependence on that. So in the nutshell, I feel like we need to get the NNPC back to playing their role as a regulator. I think they need to focus more on the regulatory side of things and allow the market forces to determine prices. By the way, Nigeria still has about one of the lowest price of refined petrol in the world. Currently, we are buying below 1,000, and the average price of refined petrol in the world is about 2,100 Naira, about $1.33. That's the average price of refined petrol in the world. So we still, the problem is not the pricing. The problem is more in the fact that a lot of Nigerians are living below poverty line. The government has not been very efficient in the use of its revenue. Using your revenue to subsidize petrol. I don't know how we arrived at the fact that we needed to subsidize petrol and electricity and exchange rate at the expense of every other thing: infrastructure, healthcare, education. And these are the things that really drive economic growth. We need to focus, government needs to focus more on providing infrastructure, providing the enabling environment for businesses, and stop inserting itself into every critical business in Nigeria. Let the private sector drive it. Again, back to basic economics. According to Adam Smith, he said, capitalists, by seeking their self-interest, ultimately is what leads to a thriving economy. So capitalism has all of its problems. It has its downside. It has its own problems because you're going to have people chasing profits at the expense of everyone else. However, over time, you're going to start to see more competition in businesses. You're going to see more players, and ultimately price will come down. So for the petrol industry, oil and gas industry, the NNPC needs to focus more on the regulatory side of things. If you know the story of cement, when we started the indigenization policy in the cement industry, we had one major player, and that was Dangote. But today, we are seeing more competition in that space. We have the Lafarge has become more formidable in competing with Dangote. We have Bua Cement, we have Mangal Cement, and a whole other smaller cement companies coming up. That is what you see when government starts to remove its hand from critical businesses and allow private individuals to invest in those areas. Before then, we had Benue Cement Company, the Nkalago Cement in the southeast. Today, most of these companies are dead. The government refineries have been moribund for years. We've heard series and series of stories about how they'll start working again, but this has not happened. So ultimately, we need to give a chance to private individuals. So for me, we have a choice between going with the government and the subsidy-driven socialist economy that we've been practicing, especially between 2015 and 2023, or trusting the capitalists to run our economy. And for me, I would trust the capitalists a bit more than the government. Over to the stock market. Last week was a very bad one for the stock market. Both the US stock market and the Nigerian stock market ended the week on a negative note. In US, we saw the job report for August. The US economy added about 142,000 jobs, which was below expectation, and we saw a downward revision for the job reports that came out earlier in June and July. Those numbers were revised downward by 86,000. On the positive side, we saw the unemployment rate come down to 4.2%, lower than 4.3% in July. That's on the positive side. So that kind of spooked the market a bit because we didn't really get a sense of direction as to how much rate we expect the Fed to cut later this week. Is it this week or next week? On next week, actually. So the Fed will be meeting by next week to decide on how much interest rate they are going to cut. Most people have put this number between 0.25% and 0.5%, the number of how much the Fed will cut rate. So last week didn't really provide any sort of clarity as to the direction the Fed will go. And we saw ultimately both the S&P 500, the Dow Jones, and the Nasdaq all dropped last week. However, we had very important information over the weekend. Palantir and Dell, two tech companies, will be added to the S&P 500 come 28th of September. And it really is a big, in a way, it's something that investors in these companies will be excited about. Getting included in the S&P 500. I mean, the S&P 500 is the most important index in the whole world. And a lot of portfolio managers, a lot of fund managers track the S&P 500 in their investment decision. Over the years, historical evidence has shown that active money management offers little reward compared to passive investing. So you have a lot of investors trending more towards passive investing. Passive investing simply means rather than try to beat the market by taking individual bets on stocks, why don't you just invest and earn the market return? The S&P 500 accounts for over 80% of the entire US market. So getting included in that index means that those companies will have more exposure to institutional investors and investors around the world generally. And fund managers who track these indexes will now be forced to invest in this stock. So it's a big deal for these companies. Palantir and Dell both will be included in the S&P 500 come September 28th. Palantir on its part is an analytical software company that helps governments and corporations, commercial businesses to use data to make critical decisions. And the Palantir has been doing well recently. They've seen their revenue, especially on the commercial side. They've seen a significant growth in revenue. Before now, the downside for Palantir was that they were too focused on government businesses. They were too dependent on government businesses. But lately, their commercial side has been expanding in a good way. So this is a way to reward the company for the spectacular performance we've seen. However, if you're trying to buy Palantir, if you're not already owning this stock, you may wish to consider the fact that we've seen an impressive run in the share price recently. Year to date, Palantir has done about 76% from January to date. In the last 5 years, the company has returned 219%. So we've seen an impressive run in the stock price. The PE ratio is, many will consider it very high. It's about 176, the trailing 12 months PE. But the forward PE is almost half of that, around 85. So many people will consider Palantir to be expensive at the current price. It's currently trading at just over $30. And with the announcement that it will be included in the S&P 500, we saw over the weekend, we saw the price move as high as 7% pre-market. For existing investors, is exciting because in my estimation, you probably see another 4% improvement in price, between 4 to 6% improvement in price. So it's something to be excited about for existing investors. Current market capitalization for Palantir is about $68 billion. That isn't much compared to the global size of the S&P 500, which is about $45 trillion. So if you do the maths, S&P Palantir is just less than about 0.15% of the entire S&P 500. So you're not expecting so much funds flowing to that stock by this inclusion. However, it's a move in the right direction for the company. But if you are trying to buy it on this news, I don't know if I see so much upside at this point. Well, again, it depends on your strategy. You may decide to wait for some pullbacks, which is bound to happen as we go through September and the rest of the year. We expect some volatility to happen, and we expect to see pullbacks here and there. But ultimately, what you want to consider as a new investor is the long-term prospect of the company, because ultimately this excitement will fizzle out and focus will return to how the company is able to continue to grow its revenue, especially on the commercial side. And then the other company that will be included in the S&P 500 is Dell. Dell is the company a lot of people are more familiar with. They have their traditional business, which is the PC. I didn't even know, to be honest, that they've gotten into the server business. Ultimately, that is what has been driving their revenue recently. That segment saw a 38% growth in revenue in the second quarter. So they are seeing more sales of AI servers, So for people who want to trade this information, maybe Dell is the one that you have to look at. But their PC sale has been unimpressive lately. We haven't seen much growth in PC sales for Dell. Over the last couple of quarters, we haven't seen much growth. But obviously, AI is what is driving revenue for a lot of these tech companies, and Dell is getting a slice of that. In terms of PE, the company appears to be underpriced. Their price to earnings ratio currently is just 18, which is far below the average S&P 500 price to earnings ratio. But then I think as an investor, you want to look at the fundamentals. You want to ask yourself, how sustainable is their AI server sales? Can they continue to stay ahead of competition for the next 2-3 years? Those are the considerations that I think anyone who wants to invest in Dell should be looking at. Like I said, the whole excitement around being included in the S&P 500 ultimately will fizzle out at some point. Dell has a market cap of about $71 billion. So again, not so much compared to the entire size of the S&P 500. So you want to focus more on the fundamentals than on this single news alone. Again, another major event happening this week is the launch of iPhone 16. It will be launched today in Cupertino, California. It's a major event because as announced by Apple earlier this year, the iPhone 16 is supposed to come with the full features of Apple Intelligence. Apple Intelligence is Apple's technology that will help you improve how you use your phone. Your phone would practically help compose messages for you, whether it's email, whether it's asking Siri to accomplish a task for you. I think they also are integrating the iPhone 16 with ChatGPT to definitely help you do more in terms of artificial intelligence. So for a while, Apple was seen as a laggard when it came to AI among the Magnificent Seven stocks. But sometime this year, they suddenly came up with the Apple Intelligence idea. We expect to see that come with the iPhone 16. They also said earlier this year that Apple Intelligence will be available also to iPhone 15, which is the latest iPhone they had in the market before this one. So what the market will be looking out for is whether Apple will be able to deliver on its promises and what sort of features, upgrades will come with the iPhone 16. We expect more improvement in the camera in addition to the Apple Intelligence that comes with the phone. They're also rolling out a couple of advanced accessories, especially with the AirPod and Apple Watch. Apple Watch, for one, would come with medical features for detecting sleep apnea and a couple of other medical features for the Apple Watch. So for Apple, for investors, it's basically how well Apple is able to deliver on these new features, talking about the artificial intelligence and the improvement to the older versions. Apple is estimated to have about 300 million phones that have not been upgraded in the last 4 years. And this will be a big market for them if the new iPhone 16 delivers on its promises in terms of advanced AI features and then improvement in the overall feature of the iPhone. So it's something to keep an eye for today as the new iPhone 16 drops. I mean, it could potentially enhance their sales by a significant amount if they can get these 300 million users to upgrade their phones. And then finally, for the Nigerian market, we also saw a decline last week. The all-share index dropped by 0.15%. We saw a decline in companies like Dangote Sugar, Zenith Bank, and MTN. They all dropped last week, leading the market down by 0.15%. Year-to-date performance moderated to about 29%. On the positive side, Owando continues to strengthen, added 5.8% last week. Stanbic declared a spectacular result last week. They added 2.6%, and same for UBA. UBA also added 2.4%. Owando, for one, I spoke about Owando last week. I really don't know what is driving the price to the level we've seen, other than the acquisition of the Nigerian Ajib Oil Company, which has seen them add up to a practically lost count of how much the company has added in the last 1 year. I guess it's over 800% in the last 1 year. I don't know if the acquisition of that, recent acquisition they made, is significant enough to account for that level of surge in price. But it's the Nigerian market, and anything can happen. On the fixed income side, we saw yields kind of flatten out towards the end of the week. It started out with a lot of demand for bonds at the beginning of the week, which saw yields come down a bit from what we saw the week before that. But as the week progressed, we started to see some tightness in liquidity level. Liquidity dropped, and then we saw yields come up a little bit back to the level it was, fairly the level it was the week before. So last week was basically flat for both the treasury bill and the bond market. I expect the same outlook. I have the same outlook for the fixed income market this week, going by the level of liquidity that we've seen recently. So I expect that the market will remain flat throughout the rest of this week. And this is where we bring it to an end on this episode of Market Tape. Don't forget to subscribe and turn on your notification button, and feel free to share this content with your contacts. Thank you. Till next week. Bye.